Chances are, if you are watching this video, you are like most traders who have a good understanding of the concepts, but you are unable to implement them into your own markets. Now, when you hop onto a chart, you don't know where to start. Well, this video will solve everything. I can almost guarantee you will come out of this video as a better trader. Now, I will be discussing top-down analysis in today's video, and I will show you guys how you can use this concept properly so you guys can catch amazing trades. So, to start off the video, I'm going to be discussing what is top-down analysis and what concepts make up our top-down analysis. Now, to start off, top-down analysis is simply us going from a higher time frame, such as the daily, to a lower time frame, such as the 4 hour, to an even lower time frame, such as the 1 hour, to then eventually us catching our entry on something like the 15-minute, 5-minute, or even 1 minute. Now, the first part to our top-down analysis is the higher time frame picture. How is market behaving on the daily, weekly, and monthly? Now, firstly, I want to state I do not trade the monthly. I do not even check the monthly, as I feel it is redundant. Now, you may be asking why. As for someone who is a scalper, a swing trader, or a day trader, you should not be checking these higher time frames, because usually on a chart we are looking for the next 10 or 15 candles. So if we were on the monthly chart, we would be waiting for about a year just to see any sort of confluence on this time frame. Something like the daily time frame is way more sensible for someone who is a day trader, as you can see the next 10-15 candles within the next 1-2 weeks, which is more sensible. There is no point of you looking for highs or lows or any other PD array 2 years ago, 3 years ago, back in 2022. This brings us on to our draw on liquidity. Now, I want you guys to pause this video and answer this question in the comments. What is market moving towards? The answer is market is either moving towards liquidity or market is rebalancing fair value gaps. Or we can summarize this as PD arrays. Now, the PD arrays we are going to use are breaker blocks, order blocks, fair value gaps, swing highs and lows, previous candle highs and lows, and mitigation blocks. Now, once we have a draw on liquidity, which is essentially a target of our PD arrays. Now, here is the quick list over. Once we have a target of where market wants to move and we have higher time frame direction, this leads us to our bias. These two factors make up our bias. Now, once we have our bias, our direction, our essential target which market is moving towards, we can then hop onto a lower time frame and use this target in order to trade with the trend. Now, it is always safer to trade pro trend than trading counter trend. If you guys try to trade counter trend yourselves, you will notice it has a way lower win rate than trading pro trend. And with all that said, I'm going to hop onto the chart and show you guys how I implement top-down analysis into my own market. So let's get into it. If you are not making at least $10,000 a month from trading, then listen up. Me and my team can pass your FTMO challenge, both stage 1 and stage 2, getting you completely funded as we have for many other clients. Once you are funded, we can use the same system we have used to pass your account to then generate you amazing profits on your live account. Make sure you guys join the group Telegram at Pass My Challenge, the first link in the description, where you guys can see the many testimonials we have. Here is Abdi. Abdi was unable to get funded for a lot of times. He's tried to pass his own prop firm many times. He has failed. However, with us, we passed his prop firm first time, and we also managed to get him $8.5 thousand in payouts, which is absolutely amazing. Here is my FTMO certificate where I've passed my FTMO challenge, and only 20 days later, I was able to get a payout, which is absolutely amazing. I was able to pass my challenge, and in the same month, I was able to receive a payout of $5,000. Now, we are changing so many people's lives. If you guys go join the group, you can see screenshots of how well our system really performs. So if you guys do want to get involved, intake for this month is limited. So make sure you guys join the group and DM me at EMSCapitals for more information. Alright, I'm on USD on the weekly time frame. And as I mentioned earlier, I do not check the monthly time frame. So we start our top-down analysis on the weekly time frame. So what do I check on the weekly time frame? I simply check for how each candle is reacting to the high and low of the previous candle. So what do I mean by this? As you can see here, for the past 3 weeks, this candle, this weekly candle, has failed to displace the low of this candle with body closure. So we are not getting body closure below this low, showing us market wants to take it higher. However, the next candle, we do get body closure above this high. This is just a telltale sign that market does want to move higher. Alright, now moving to the daily time frame. What can I see on the daily? So to start off, firstly, market is playing within this order block, which we are reversing off of, as you guys can see, and we're also running this external liquidity right here. So if you are unfamiliar with external and internal liquidity, make sure you guys watch my last video. But the point being, market moves from external to internal liquidity, which basically means market is either moving to a high or low or moving to a fair value gap. Once you understand this, you can really understand bias and you can understand which direction market is moving in. As I said, our PD arrays such as old highs and old lows and fair value gaps are targets. These are targets which market would like to reach. So we need to outline those targets and realize where market is moving so we can catch in on that move. So a potential target could be this high right here, which I'm going to outline for now. Now, market is constantly repeating the same cycles. Now, we are constantly moving from old highs and lows to fair value gaps. If you don't understand, I'll show you a couple of examples right here. As you guys can see, we have this trading range right here. Now, we do get a fair value gap right here, which market comes, we take the fair value gap, we take internal liquidity, and what do we do after? We take this high right here. So we go internal liquidity, we take external liquidity. We go from taking a fair value gap to then taking out an old high. What do we do again in this range right here? We leave a fair value gap. This is the low of the range. This is the high of the range. We have this big fair value gap, which market comes and takes. What do we do next? We come and take this high. The point simply being, market moves from external to internal liquidity or internal to external liquidity. Or in other words, market moves from sweeping or running an old high or low to then taking a fair value gap. Or market takes a fair value gap, then aims to take out a high or low. So when checking your daily time frame, make sure you guys outline all the PD arrays which is affecting market and price right now. So this order block is what market is reacting off of. This old low, which market has swept and reversed off of, we can use that as a confluence. This high right here, we can aim for market to reach this high and take it out. And we also want to look for current ranges market may be playing out in. Now, what range is market currently in? We are currently in this intermediate time range, and we have another short time range right here, which is not complete. And do we have any fair value gaps in either of them? We do not. So what I'm going to do is now drop to my 4 hour and see if I can find any more confluences. Now on the 4 hour time frame, this range is a lot clearer to me. What can I see? Firstly, I can see market easily displacing, running these highs from this high to this high. Also these highs right here. So what does this show me? It shows me market is running these highs instead of sweeping these highs, whereas we're sweeping these lows and running highs. This is a telltale sign of market being bullish. This brings us on to understanding whether market is sweeping liquidity or running liquidity. There is a huge difference. Now, sweeping liquidity is market when market comes, takes liquidity and fails to displace, such as market sweeping this low. Why has market swept this low? As you guys can see, market comes, sweeps this liquidity, fails to close below this low, and we get a quick reversal upwards. Another example, this high right here. Market comes, sweeps liquidity, and fails to close above. Market comes and quickly reverses. Now, what is a run on liquidity? A run on liquidity is when market can comfortably displace a high. So, as you guys can see, this high right here, this is liquidity right here. Market is comfortably displacing this liquidity. How do I know? As you guys can see, each candle is displacing the high of the previous candle. You can see the body of this candle displaces the previous high of this candle. Now, you can see how much energy market is moving with. We leave a fair value gap behind right here. So with this fair value gap, we have another PD array overlapping. You can see the high of this candle is overlapping with our fair value gap fill. Now, here is where a lot of traders mess up. They may be just buying. Why is that wrong? You just said we are bullish. Before we enter, we want market to give us a sign on the lower time frame firstly. And to confirm our bias even more, I can see market is not respecting any of these bearish PD arrays, such as this fair value gap right here, this fair value gap right here, and we do have a fair value gap right here, which market will most likely not respect. And why do I know this? If market is not respecting this fair value gap, it is likely all fair value gaps above will fail. Why is this? If market does not respect this fair value gap, firstly, this range liquidity will be taken. Now, if market does not respect this fair value gap, this range's liquidity will be taken. Now, market will not respect this fair value gap. What does it mean? this high will be taken right here. This range's high will be taken. Now, what other evidence do you have to say this fair value gap is not likely to hold? We have multiple order blocks, which are reinforcing our move to the upside, as you guys can see right here. We have order block here and another order block right here. So here is understanding the next move of the market. So we do have a short-term range right here, and market has currently taken external liquidity. Now, what do we know? Once we take external liquidity, market comes back and takes internal liquidity. And lo and behold, we have a fair value gap right here, which does also overlap with a high. So this is just an added confluence for this fair value gap. We have two overlapping PD arrays. Now, with market constantly respecting bullish PD arrays, I can assume this fair value gap will only be respected. So if you are on the 4-hour time frame, you want to drop down to the 15-minute. If you are on the 1 hour, you want to drop down to the 5-minute. And if you're on the 15-minute time frame, you want to drop down to the 1 minute. Seeing as I'm on the 4-hour, I'm going to drop down to the 15-minute. Now on the 15-minute, I can see this range right here, and both our PD arrays align with the low of this range right here. So I'm going to expect market to come, tap into this fair value gap, tap into this old high, and come sweep this old low right here, along with this fair value gap right here. So this is going to be my entry right here. Now I'm going to hop back onto the 4-hour time frame to set my targets. I'm going to place my stop loss where the trade is invalid at the bottom of the fair value gap. As for take profit, now you could target this high right here. You could target this order block right here. So it is all subjective. Now I do recommend you guys partial, as this is quite a big trader for about 100 pips. So I'm going to take my profit at this order block right here. So if I just play out the trade for you guys on the, let's do the 1-hour time frame to speed things up. You see, we do get that initial tap in right here. So market does tap us in, and we are in barely any drawdown. Now if I play out the trade, you can see market shoots up and smashes our take profit for a nice 124, running us about 85 pips, which is absolutely amazing. Now this trade all came down from multiple steps, from me looking at the weekly time frame to the daily to the 4-hour, lining up all my confluences and see what makes the most sense right now. If you guys do use all your confluences correctly, you'll get an extremely high win rate and you will be profitable. Now, just a quick recap of the video before I end the video. So we started off on the weekly time frame and the daily. We were checking our higher time frame context to see what market was saying on the higher time frames. Then we dropped to a lower time frame for us, which was the 4-hour time frame, and we ended up outlining all our PD arrays, our old highs, old lows, order blocks, fair value gaps, which are targets for the market. As I said, guys, market moves from internal to external liquidity, or from external to internal liquidity. We can use this as targets. If we know market has taken a fair value gap, we know market is either going to take an external high or external low. Thirdly, we dropped to a lower time frame. For us, it was the 15-minute. We dropped to the 15-minute as we started on the 4-hour time frame, and we found a perfect entry which had so much confluences in it. As you guys can see, we had two overlapping PD arrays. We had this external low right here, and we had this fair value gap right here, which happened to also be in our 4-hour fair value gap. So if you guys put all these 3 steps together, you guys can 110% be profitable. Thank you guys so much for watching. And I know trading is not easy, so if you guys do want to be making money while you are practicing, while you are backtesting, whatever it may be, if you are still an active trader, you can also trade on the side, also have passive income coming in. Make sure you guys click the first link in the description where we can manage your account. We can pass your prop farm challenge, and we can also manage your account to generate you passively profits. So thank you guys so much for watching, and I'll see you guys next time.